About 3 out of 4 Americans believe that if you double your salary, you will double your financial freedom. The problem is when most people make more money, they end up in a bigger financial hole. I'll show you. If you make $75,000 a year and tomorrow you walk into the office and your boss tells you, congratulations, you're getting a raise to $150,000 a year, you doubled your salary, most people would tell you that you're wealthy. Half of Americans making over $100,000 a year right now are broke with little to no savings and investments. Now you might say that you just need to earn a little bit more money. Well, let's take a look. A third of Americans making over $200,000 a year are broke with little to no savings and investments. If you don't have the financial discipline at $50,000, you're not going to have it at $75,000, you're not going to have it at $100,000, and you're definitely not going to have it at $500,000 a year. If your goal is to be financially free, which is what I think it is for pretty much everybody, what I want you to do is start backwards. Define what this financial freedom looks like and then work backwards from there, because everybody is chasing that dream, but many people are going in the wrong direction. And what that means to me is 3 things. Number 1 is having a good savings. I'll explain what I mean. Number 2, building cash flow to live off of. And number 3, having no consumer debt. So let me explain what this means, starting by talking about savings. My definition of financially free is not having millions of dollars sitting in a bank account, because that savings is losing value. But I do want to have strategic savings. And what that means is, number 1, I want to save money only for 3 purposes. Number 1, I want to save money for an emergency. Number 2, I want to save money for a big purchase. And number 3, I want to save money for an investment. Those are the 3 reasons why I save money, but focusing more on the emergency side, because I think this is where a lot of people get confused. I want to have money put aside to protect me against an emergency. How much? Somewhere between 3 months to a year's worth of expenses put aside to protect me against an emergency. So if you look at your bank statement, your credit card statement, and you see that your average monthly expenses are $5,000 a month, that means you want to put aside $15,000 to $60,000 in a bank account, not to purchase a car, not to purchase a home, but to protect you against an emergency. And I know this is a big range, and the reason why it's a big range is because, well, you're going to be in a different financial situation as me. If you're 25 years old, you're not married, you don't have any financial responsibilities, you might only need 3 months. If you're 45 years old, you got kids, you got a wife, you got a husband, you got expenses, you got other things you got to take care of, and you don't have a big risk tolerance, maybe you got to be closer to here. Figure out where it is a good tolerance for you and build this savings, because this is what's going to protect you against something bad happening, because guess what? Sometimes things happen. Sometimes you get laid off. Sometimes your company goes bankrupt. Sometimes your business has a bad month or 2 months or 6 months. And you want to be able to not stress and declare bankruptcy because you have no cash to protect you. We remember when the pandemic happened, nobody had money to feed themselves for 2 weeks. And this is where you don't want to be in that situation. Sometimes things happen. Have some cash put aside. Now, what I said before is you don't want to just save your money to save it, and the reason why is because our savings are losing value to inflation. Now, this has been going on way before the pandemic. This really accelerated after 1971, when the United States dollar was taken off of the gold standard, because that changed the way that our money functioned. Now, on August 14th and 15th, 53 years after the dollar was taken off of the gold standard, I'm hosting a live, free, and virtual investor summit where I'm going to be going over, number 1, how money has changed, not just over the last 5 decades, but over the last 5 years. And then more importantly, how you can build wealth and find investment opportunities in today's changing economy. It's a completely free investor summit. I would love for you to join, and we're going to be going over a lot of different things. If you'd like to join, all you got to do is register, and I got the link for you down in the description below. These savings are there to protect you against an emergency. They're probably going to be losing value to inflation. I mean, it's good to have this money in a high interest savings account, but the goal with this is not to build wealth and to measure your wealth. The goal with this is to protect you against an emergency, because number 2 is where your wealth is built. Which brings us to number 2, cash flow. This is what I put my focus on in my 20s, to build this type of cash flow. And what cash flow looks like to me is I take money that I'm earning and I use it to buy this investment that I don't really care if it goes up in value or not. Obviously, that's a good thing if it goes up in value. But my goal of buying this thing is so it pays me with cash flow. I don't have to sell it to make money, and I don't have to actively operate it and manage it to make money. I started investing in this type of cash flow by investing in real estate, and then I got involved in the stock market with dividend-paying funds and dividend-paying stocks. But the whole goal here is to buy investments that pay you without you having to sell. That's my goal, at least. And my goals are mine. I'm just a random guy on YouTube. You got to figure out what works for you. But the way that I make my decisions when it comes to my investments, most of them, is I want to invest in something that's going to pay me because my goal is to stack the cash flow. Because if my expenses are $5,000 a month and my investments are paying me $5,001 a month, well, that means every month I have enough money coming in from my investments passively to pay all of my expenses, and I don't have to worry about getting paid. I don't have to worry about going to work to get paid because I have these investments that are covering my expenses. Now, how do you go about doing this? I started off by investing in rental properties. The way that this works is you go out, I'm gonna turn this into a home right here. You go out and you buy this property right here. You're not buying it to live in yourself, you're buying it to rent out to somebody else. Somebody's gonna live in this property. It could be an office building, it could be a retail building, it could be a storage facility. You're buying this thing to rent out to somebody else. That way you can get paid this rental income. If you do it correctly, this rental income will cover all of your expenses, your property taxes, your insurance, your maintenance, your management fees, and your vacancy costs. Notice how I said a management fee. My goal is not to manage the properties. I don't want to know who the tenants are. I don't want to have to deal with the tenants. I don't want to have to deal with the clogged toilets. I don't want to have to deal with all the headaches that come with dealing with the city, dealing with the contractors. That's not the game that I want to be in. Property management is a whole industry and business in and of itself that I don't want to be a part of. I want to be a part of acquisitions, finding good deals, and stacking the deals, and hiring a good property manager that's going to do the day-to-day work. Now, it took me a lot of time and a lot of work to find good team members. It took me a lot of tries to find a good property manager. It took me a lot of tries to find a good contractor. But now it's very passive for me. My time is spent reviewing the reports that my property managers give me and making sure that these properties are making money. That means every month I get checks deposited into my account. I don't have to go to work to earn. I work to buy the properties, get them renovated, give the keys to the property manager, and then I review the reports every month, but it deposits money into my account every single month. It's not easy in the beginning, but if you stick with it, it can make you that sort of passive cash flow. The alternative to this is to invest your money into dividend-paying funds on the stock market. So instead of investing in individual companies, which requires a lot of work, you can invest in funds, ETFs, index funds, mutual funds that are for the purpose of dividends. Now, the goal here, just like this, is to keep investing your money every week, every 2 weeks, every month. That way now you can work to stack the cash flow. And the thing about cash flow investing, the thing that makes it difficult, is it's going to be very slow in the beginning. It's going to take you a lot of time to see any real success. I call it a decade of sacrifice. But if you stick with it, and you keep investing more money, as you make money, you keep reinvesting it. Well, the first few years, you're not going to see anything. Year 1, year 2, year 3, it's no return. You're putting in all this money, you're putting in all this work, and you get no return. Year 4, you start to make a little bit of money. Year 5, you start to make a little bit more money. Year 6, a little bit more money. Year 7, now you're starting to see, oh, whoa, I'm starting to reap the rewards of all the work that I put in. Year 8, a little bit more. Year 9, a little bit more. And now year 10, you start to make a little bit of a significant income from the cash flow from your investments. Now, the nice thing about this is supplementing the income from your job. And now this is money that you can use to go out and buy a watch. You can use this money to buy a car. You can use this money to help pay your mortgage. You can use this money to do a lot of different things because you work to build this cash flow, and this is the money you're making even if you don't go to work. And then when the cash flow exceeds your income from your job, you could quit your job if you wanted. You could keep working. And now you can say, you know what, I'm going to go on a vacation and it's not going to stress me out because I know I'm going to keep getting paid from my cash flow because I work to build the assets. But it doesn't happen overnight. I call it a decade of sacrifice. It takes a lot of work. My goal is to invest for cash flow. Not everybody likes investing for cash flow. This is the way that I look at it. But for me, when I talk about financial freedom, this is what freedom looks like to me. Because if I know what my expenses are and I have cash flow coming in from my investments to cover all of my expenses, I'm free. Because I know my investments will continue paying me even if I'm not going to work. And the third part of this financial freedom to me is not having any consumer debt because I don't want to have to stress about money. And what that means is I don't want to finance something 0% APR. I want to buy it outright so I don't have to worry about the payments. I hate playing the payments game. I don't want to have a car payment. I don't want to have these costs. And if I know that I can own my stuff and I don't got to worry about the payments besides whatever I need to survive, well, that gives me a whole new set of freedom. Now, I take it a little bit tougher where even for me, my rental properties, I have no debt on my rental properties right now. I'm not saying that I'm against debt when it comes to business or rental properties. Just for me, it makes sense where I am right now because I don't want that headache. When I invest in real estate, I want it to be completely headache-free because my focus is building my business. My focus is spending time in Briefs Media. My focus is not going out and trying to manage my properties. So I want it to be as headache-free as possible, which is why I've just been accumulating properties with cash. And I understand that I'm in a very different situation. I'm very fortunate. I get that. But I want you to understand, especially when it comes to consumer debt, that consumer debt, debts on your credit card, debts on your car, debts on your clothes, debts on your vacations. These are things that you're paying for with your income, your earned income, your active income, your job income. You're going to work to pay back these expenses that aren't putting any money in your pocket. It's a different story when your rental property is making you money and that money is paying for your mortgage. That's a different story when you have to go to work to get paid to pay for these debts. I don't want you to have these types of consumer debts that are now you're working to make money to pay off these debts. That's a game now where you're working to pay back yesterday's expenses, and when you're always working to pay back yesterday's expenses, you're never going to have the ability to build wealth tomorrow. So for me, freedom starts with having the savings, number 2, having the cash flow, and number 3, having less outflows, which are no consumer debts, because now I can control my expenses whenever I need to. Now, the last thing I want to let you know is that for those of you who are investors and like to stay up to date on what is happening in the financial news, my company Briefs Media has a free newsletter called Market Briefs, where we break down what's happening in the economy, the housing market, the stock market, crypto, and global economy into a fun, witty, and easy to read newsletter. You can read it in less than 5 minutes every morning, and it's completely free. So if you haven't joined Market Briefs yet, I got the link for you down in the description below.
You weren't charged taxes while it sat there. What's wrong with you?
401ks are the most popular investment vehicle in the United States, but the studies show that most Americans have no idea of how they work. But that stops today, because I'm going to be going over 5 things you need to understand about your 401k.